All right, and welcome, traders. Good morning, good afternoon, good evening to you from wherever you're joining us in the world. Welcome to Trading Battle number 32. I'm your host, Christopher Guzman. I'm the founder, CEO, and head trader of Kickstart Trading. We help retail investors become disciplined, confident traders in as little time as possible for less. Come and check us out at www.kickstarttrading.com. We're going to have a fantastic battle this evening for you. And in keeping with the Trading Battle tradition, all of the winnings from this evening's battle will be donated to the winner's charity of choice. But first, if you love what we're doing here, don't forget to show us by smashing that like button. If you're not already subscribed, go ahead and get subscribed. And the winner of tonight's battle will be announced in 5 days' time. So if you don't want to miss that, go ahead and hit that notifications bell and find us on Twitter, the Trading Battle. Now, without further ado, let's go ahead and get started. We've got two absolutely fantastic guests with us tonight. First up, we have Jamie Saettele. Jamie is Chief Technical Strategist at Scandinavian Markets and the founder of SB Trade Desk. He's got over 17 years trading experience, and he's the author of Sentiment in the Forex Market. He's also an ex-Daily FX FXCM Bucknell alum. And Jamie, this is your third time appearing on the Trading Battle, isn't it?
That it is.
Good evening, Jamie, and welcome. How are you? You okay?
I'm doing well.
Excellent. You excited?
I'm super excited. Yep, I'm just as excited as the CPI here in the U.S. is high.
Excellent. All right. And in the other corner, we've got a first timer in our midst. I'd like to introduce Ryan Littlestone. Ryan has over 30 years experience in the financial markets and trading. He's the managing director, trader, and analyst at forexflow.live. He started on the London Metal Exchange, and his motto is, quote, still fighting markets every day, still learning every day, and still trying to teach every day. A big warm welcome to you, Ryan. Good evening.
Yeah, thanks, Chris. Good to be here.
Excellent. All right. In true Trading Battle fashion, there are going to be 3 challenges this evening, okay? So challenge number 1 is you each need to trade a diversified portfolio of assets. So in other words, don't just go and give me one asset or one asset class. Go and, let's get a selection of trades from various asset classes. So let's start with you, Ryan. What are you looking at for challenge number 1?
Yeah, well, first I'm going to kick into FX. I'm going to look at Aussie dollar. That's a trade I've been looking at for a long while. I'm actually holding a long in this at the moment. I've been buying it since 75, actually, all the way down to last week 69.90. The trading itself is pretty much, I'm going to be fighting I was fighting the RBA. They were coming out with this 2024 rubbish about when they're going to hike rates, and inflation's booming across the globe at the moment, and I just thought that call was a load of crap, really. So as usual, when I trade long term, I started too early. As I said, started buying it at 75, bought it all the way down, and I've traded the bounces in between. So yeah, it's a little one I picked up over the CPI as well. So yeah, looking for a decent rally in this one, at least up through 73, and see how high we can go.
Okay, so to be clear, we're looking at going long on Aussie dollar. Is that right? Long.
Yeah, I'm probably going to buy a little bit now while I'm sitting here, because I think, yeah, we're sitting around about the support area that we had, intraday, around about this 70.50. Let me just zoom that in a little bit. So yeah, a couple of zones I've got here, the sort of pivot zones that I look at, and these are zones that always seem to have an effect every time we're here. So we had one sort of 70.80. We've got a little bit of level that's developing today around about the 45.50. Another zone down here, sort of 25s, 35s, that sort of thing. So I was long, as I say earlier today, 67s, 50s. Bought it on a break up through 72. Got out of some, pretty much into the highs here around 38. And then I actually got stopped on that part of the trade down at 75 as it crashed back through when we got those Bullard comments. But I'm looking to go long again, so I'm going to have a little nibble here at 66.
Okay, excellent. And are you looking at anything else aside from Aussie dollar?
Yeah, well, again, I'm gonna stick to FX, I think, because just for this next one, again, another trade I'm in for the long term. This one's been a bit of a chase, really. Again, it's playing the switching expectations between from the ECB. I mean, I got this trade right, but traded it wrong the other week because I traded the break of this zone here. We've had a big zone that we've been trading a range, 112, 114 for the last few months.
Sure.
And I traded this break up here, just managed to grab a few pips out of it. Then I thought, right, we're going to get another dip. We had these webinars at Forex Analytics that I sit on. I said, yeah, we're going to get another dip. We got a dip down here around about these lows, 11.20. I didn't buy it. Don't ask me why. I did not buy it. So I ended up chasing it. We got the Bank of England obviously coming out, and then after that came the ECB. The surprise turn, the ECB, in their terms, turning hawkish. So I had to buy it 13.80, and then I bought a bit 14.29 again, trying to trade the breaks higher. So I'm sitting long there. Again, this is another one, dips into this 1400, 1380 around here is where I want to get in if we see that tonight, but I might just jump in again anyway.
Okay, so another long on Euro Aussie as well then, yeah? So Aussie dollar long and Euro dollar long. Okay.
Yeah.
So bearish on the dollar then?
Yeah, I've been long dollar yen since September 2020 because, again, fighting the central banks, because I like trading long term. That's my bread and butter, really. And I saw that every central bank was calling for there's no inflation. We're not going to get inflation. And really, part of the trade came about because I thought, well, what if you're wrong? After all these years of not getting inflation, it's like a price. It's like a market. You get your highs, you get your lows. Well, we've had low inflation for ages, so it could be about time to turn. Plus, economies coming out from the virus mess. You're going to see some inflation there just with normal growth. So yeah, I started building dollar yen longs September 2020, which I'm still sitting at the moment. And it's really trading the central bank expectations. That's what I love doing, and especially when you get a crisis. When you get a crisis and central banks are moving, they're easing, they're doing whatever, you get those expectations, and when they turn big. I've been long down to 103.10 when that is, and here we are up at 116s again. So that's the basis for a lot of these trades, and particularly the Aussie dollar, again, central bank on the turn, the ECB. They're probably the next biggest central bank, and if they turn hawkish, it's potentially another big move. But we're not getting away from this range, and that's a little bit troubling for someone who looks at things from long term. But yeah, that's the basis, fighting the central banks and those turns and expectations.
Excellent. Never waste a good crisis, right?
No, exactly. Good for Vol.
Excellent. All right, in our other corner, Jamie, what have you got for us? What are you looking at? What's interesting?
Well, I'm gonna just Ryan talking about dollar yen here. So Ryan, check this out. This is a weekly dollar yen chart. And this is a trend line back to 1990. Talk about long term, right? So 1990, 98, that was resistance back in 2015. And we're getting pretty close. So I would say we have a massive decision point looming here in dollar yen. And if I even do something like this and throw up a little line across the highs, boom, 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 you can see the intersection is really soon. So yeah, dollar yen's going to have a decision to make. I don't know. I don't pretend to know ever where something is going, but I like to think of markets kind of as, train going, to different stations, and this is the next station. So we'll see if we continue to go or if we reverse and come back lower. But I'm very interested to see, how dollar yen reacts up here. So I don't know, for all you out there watching, be sure to pay attention to dollar yen. And also click that button on YouTube so you can watch all the time. All right. Going to Aussie. I'll keep it FX here. I also like Aussie longer term. Mainly, again, I'm going to go to a long-term chart here. This is a weekly chart. This is just a channel, and we have what I call an internal parallel that we've been reversing off of for really for years. And if you just look to the left of the chart, keep it real simple, that is huge, right? That call it 70, 69.90. I mean, that was the November 2020, President Biden U.S. election low. General area was resistance all the way back in December 2019. Support back in November of last year, and then of course in January of this year. And for me, I'm gonna put in an order at 71.35 to buy it. Again, we are in kind of the quietest period of the day here trading wise, so that may not, probably won't get triggered during this session, but I will leave that order at 71.35 with stops down here. And I'll be targeting a level like 73.70, just for the sake of this trade, looking up at that high from mid-November. And also, if you look at a daily chart, it is also the 200-day average, which is right there, right?
Wow, so buying Aussie dollar as well. What are you two in cahoots or something?
Yeah, we're us, with our we're just really moving the market over here, I don't know. I do think like that we are at a kind of a bigger inflection point for the dollar, and we have kind of been there for a while. So this is something I talked about when I did a webinar yesterday with Scandinavian Capital Markets. So first, there's $2 indices that I look at, right? Like, so you look at DXY, which is what a lot of people do look at, and here is that DXY chart. So here's a trend line. We probably looked at this because I show this chart every time I'm talking to anybody. This is it's a 10-year trend line, okay? The underside of that trend line has been resistance back in November, and then again in January. And we had really big kind of a trap move with that dollar rally 2 weeks ago. It's kind of a bull trap, right? Big rip higher, and then the next week straight down. So bearish signals there, but as far as the actual timing of this move, like to get this thing going downhill, I am following this dollar index, which is the Dow Jones FXCM dollar index, which is just a quarter each of euro, pound, Aussie, and yen. And I am looking straight at this trend line back to, I'll make it a different color so everyone can see what it is. Right there, red, that trend line, which again was support today, right? I got kind of excited midday thinking we were maybe going to crack it because in my own book, I'm running, basically a dollar short book right now. So did not happen, reversed higher, and essentially nothing at the end of the day. We were flat. But yeah, this is where I'm paying attention. Break this, and then to me, it's it's kind of downhill quickly. But yeah, I do like Aussie. Euro a little trickier for me. Another reason to hold on here. Another reason to like Aussie, and I'll show in a second here, but when we came out this morning with that 7+% CPI in euro, I was kind of salivating, hoping we were going to get down to this 1340, 1350 level. One, you see this thick line here on my trading view chart. That is 2022 volume weighted average price. It's just a completely objective kind of bull bear dividing line, if you will. And you can see that in the chart, right? I mean, acts as support, acts as resistance breaks. There's ECB, of course. So I was hoping to tag that, didn't get it. I don't know if we're going to get that or not. But again, on a longer term basis, we have reversed from a massive level just above 111. So near term, for purposes of this show, I do like Aussie a bit better at that, what did I say, 71.30-ish level. So that's that for me.
Yeah,
Okay.
I've just taken my long at 71.67.
Yeah.
I'd like to get it closer to 50, but conditions prevailing, I'd rather be in small. Yeah, I fully agree with your levels. You know, I'd potentially buy it all the way down to 70 again if it went there. Obviously, we're not going to see that tonight, but yeah, I think definitely for moving forward.
This is a I'll show. This real quick. This is a little trick that, and I'll be talking about this probably on different scales at different periods during this. But like, this is something that a lot of people probably aren't aware of. And if you look, I call it daily or weekly reversal support and resistance levels. So the idea is look to the left of the chart, okay? And when you have a intersecting, it's basically you have to have a range, right? So you have to have a low here and the high, look between the low and the high, look for the low period, which in this case was this week in March of 2020. The close of that week ends up being support. You can see right there, okay? 1132. It actually happens quite often and more than people think. In fact, I took a trade last year on this on the same basis, which being the high week right here, right? That ends up being resistance here and then over here. So you can do that on hourly charts. You can do it on daily charts. You can do it on weekly charts. But a fun little trick there.
Fantastic. We've got a question from the audience. What do you guys think about the cable while we're on the dollar? Might as well take a pit stop over at the cable.
Well, I'm gonna let the man in that country speak to this. So
which one?
Go for it, Ryan. Go for it.
Yeah, it's a bit of a bucking bronco at the moment, isn't it? You know, I haven't got much tech on this chart, but to me it's quite messy. You know, it's got wide range. I like trading cable at the moment. I don't like trading cable because it's just all over the place. I prefer euro sterling. Again, this is another trade I've got on that I've been in for a long while. And you know, when you're playing the central bank divergences, cable really is a wild one. I mean, we had the Bank of England, you know, last week where we nearly got a 50 pip hike, which would have surprised the markets. And then we get Bailey coming out in the presser, and I don't know, he just shot it to bits. You know, he came out saying, "Oh, you know, we know inflation's going up, but please don't go and ask for your bosses for wage rises." And you're like, "What the hell are you talking about? Well, what are you hiking for? You know, you get hiking, you can squeeze people's incomes, but they can't go and look for a wage rise." But anyway, so back to cable. I think a lot of it right now is trading on the back of the dollar, more so than the pound. And we're seeing this range, you know, anywhere down, you know, 135. If it cracks under 135 and starts holding under there, then you've got to really stick with shorts. But until we break something like 137, even up to 138, I feel we're just gonna keep ranging. But you know, it's been there a while, and we are getting these shifts in central banks now. So you know, if we are going to see a turn in the dollar because the Fed's fully priced, then this has got some potential upside. I mean, if you're looking at the wider picture, you know, there's a hell of a lot of resistance up at this sort of 142, 143 area. Again, I haven't got any on it here at the moment, but you know, got a ton of fibs up there as well. Really big zone, you know, got that 145 sitting there as well. Conversely, if we break down, you've got to be looking at 130, get under there, and we're heading down to some of those lows again, you know, maybe the mid 120s. So yeah, real wild horse at the moment, but I still prefer to, if I'm playing sterling, I'd rather play against the euro.
Nice.
Yeah.
Do you agree?
So I'll bring in, so here's a long-term cable chart. This is just the, you know, 2007, 2014 line. We've kind of been trading along that. And again, this is all my charts, by the way. These are all log scale. So people are wondering at home and they're drawing something that doesn't look anything like mine. It's probably because you're on arithmetic scale. But yeah, I mean, we've been trading along this, you know, trend line for a year. This was the February high last year. So from a very long-term, just, you know, any simple chart view, you know, this is a pretty important test. We've kind of been testing it for a year. Trading wise, near term for me, I think we've got something maybe like this. If I'm looking at this from an Elliott perspective, right? Kind of got a nice impulsive rally here. A, that little spike today, B, maybe. So for those out there that do follow Elliott, this maybe is an expanded flat that's underway. But yeah, I am not trading British pound at the moment. I will point out, I think euro is probably a better long on a swing or longer term basis than pound, just based on this chart. This is euro pound, and it's a big giant range, and has been for 5 years, right?
That is beautiful.
I mean,
Very
you've
nice.
got massive resistance, massive support. Like the direct middle of that range has also been a pivot at times. You know, for those candle folks out there, huge, outside weekly reversal last week. So I don't know. That suggests to me that euro is probably the better trade relative to pound. That doesn't mean that pound has to tank, or they could just both go higher and pound could be less. So I don't know. But yeah, euro's cleaner to me, and euro pound actually does look okay on the long side. Although I trade mostly dollar pairs, but that's kind of my 2 cents there.
Excellent.
I agree with that view. That 83 handle was massive. The 2019, 2020 lows. As I say, I've been short since 91.80, and that was my target to get out last week. Unfortunately, it fell on the BOE and ECB day, and I got the break. I've been waiting for this break of 83 for weeks, and then we got down to that level again. I didn't react quick enough to take anything off, and it's huge level. But what do you think when you get levels like this?
That was a fast move too.
Yeah, it was literally 15, 20 minutes between, when the BOE started their presser and when the ECB had their decision and all the notes came out. But, it's funny when you look at technical analysis like this, you get a huge level like that. All people are going to remember that for is that it was a technical level and it held. Not a lot of people remember the reason that changed, the reason that became a level was because of the change from the ECB. They came in, they changed their tone, bang, off it went. And, I ended up getting out most of my short that I've held for over 18 months, 83.68. I think I folded most of it because it's the end of the road. When you look at expectations and you get the ECB changing, bang, it's gone. But, I love levels like that. That will go into the memory bank. The line will sit there on my chart for ages because, if you want a perfect technical level that plays well, you've got nothing better than that one there. It's
100%.
It's beautiful.
Well, speaking of crazy important technical levels, and while we're on British pound, I'll bring in this chart of pound yen. So, here today, we didn't quite trade above that high from October last year, but you can see this red line here, right? Why is it red? Because it happens to be where we closed the day before Brexit. And that's been a very, very sticky level. Like each time we've traded up there or near it since, that day in 2016, we've traded off pretty hard. This was back in October. Again, 158 down to 149. Did it again back here in January, and here we are again. So, much like dollar yen nearing that huge 117, 30 level, excuse me, pound yen is testing its own level right now. Again, I don't have a dog in this fight at all, but I just think it's interesting that we're trading at that pre-Brexit level in pound yen, which of course was, just an insane move. I don't know. I don't have much to think about this. I don't know, Ryan, if you have any thoughts on pound yen at all, but
not specifically, but you look at charts, you look at levels. What do you do against that? You maybe try a short into that level again, but I'll be looking like I would any level. When you've got big levels like that, if it's going to break, it's going to go. So if you're going to, a level's a level until it's not, as we like to say. So I would go with a short into that level perhaps, but I'll be flipping to long if it breaks, you know, so maybe some 20, 30 pips above it.
Yeah. I love what we are. We're kind of similar, I guess. I'm starting to realize
Yeah.
this. I say the same thing. You know, resistance is resistance until broken, right? Support
Yeah.
until broken. Same idea. So yeah, I'm with you there.
Yeah.
Just a quick detour, guys, because you said something interesting, Jamie. You said you switched to a candle chart. Were you
Right.
on Hanashi before that?
No,
what's your...
just on bar charts. I
okay.
I toggle between bar charts and candles. So.
Oh, right. Okay. Excellent.
Yeah.
Any particular reason?
Well, one reason I tend to look at bar charts is if I'm looking at, first of all, if you zoom out far enough, you can't really tell a difference anyway. But
Sure.
one reason I look at, you know, so let's see if I can get like a good example. I don't know. From an Elliott perspective, for me, like looking at bar charts, I can see the patterns a little bit more. Just the way that my eye works, everyone's different, right? But you know, you zoom in, change it to candle. I don't know. It's the pattern doesn't stick out as much, but they both have their uses. Maybe you can see the emotion a little more because you can see the wicks a little bit, you know, a little bit more accentuated. But yeah, they both serve their purpose.
Excellent. All right. We've got to move on. I'm being nudged by our producers. We've got to move on to challenge number 2, though that was a fascinating discussion for challenge 1. Thank you, guys. Challenge number 2 is your opponent gets to pick the asset that you must trade, but you get to decide what you're actually doing. So, Ryan, do you want to go first and go ahead and pick an asset for Jamie?
Yeah, let me think. What can I? You look a bit like you like a bit of metals now and again.
Okay.
So I'm gonna throw you. You can pick either gold or silver.
Okay. Alrighty. You know what? I think for the purposes of this, I think we're going to go with silver. So heading into next week. Okay, so one, I like the gold chart on a longer term basis, and I'll share that real quick. But for a shorter term trade, I'm looking at silver. So here's a gold chart back to 2015. Beautiful channel, right? This is a channel extension, which actually was the high back in August. And since that point, we have gone into, call it a triangle, if you will, just call it a massive coil, right? And much like US dollar is testing that lower, breakdown barrier, gold is testing a massive breakout barrier. So, again, resistance is resistance until broken. So we haven't done that yet, but something to keep an eye on. So for silver here, which has, seriously lagged gold, we reversed off 618 retraced today, right? From that Jan high. And I'm looking lower towards the 618 of this rally. So that's going to be 2266 or so. When I look at this chart, I want to be short, but probably leave orders somewhere up, somewhere up here, because I like to sell into resistance, even if I'm looking for a little bounce. So we reversed off a big level. I want to sell a bounce. I'll be looking to sell, order 2340, stop out above the highs and targeting 22. I'll call it 2267. So I'm going to put that order in now.
Okay. So you're shorting silver.
Yes, I'm going to put an order in, hope it gets triggered, and then helps me go to a victory next week.
We'll see.
Yes, we will.
Excellent.
What about you, Ryan? Well, let's see what do you think about like S&Ps?
Oh, you're gonna throw me the old S&P, are you? That old bone. Okay, yeah, we'll have a look at that one. Get the old chart up. Yeah, there's been a lot of noise in stock markets. Are Fed hikes going to have the sort of taper tantrum and rates going up? We've seen the market up and down, up and down. As the Fed got really hawkish into January, we saw that big sell-off. and it didn't last. You know, everyone was thinking, you know, we had a decent move down. Oh, this is the bear market. The worm has turned. You know, we're going to see 4,000, 3,500. You know, get the Dow 20K caps back out again, and boing, it's bounced again. So what I'm really going to look at with this one is just simple levels. You know, I'm a simple guy. You know, as I came from a time on the life floor where we didn't have charts. We just stood in a pit, listened to the orders. As I said, I got my life jacket on. This is as I walked off the floor that last day. Still got my trading cards in the pocket. Still got my calendar. I can tell you what. Have a quick look. I can tell you from the Financial Times. This was my economic calendar back in that day.
That's fantastic.
It's all that page from the FT.
That's so cool, man. That's awesome.
It's an interesting one because people keep coming and saying it's going to set off, but it's not. So again, back on the chart, very simple. This 44, 45 area, it's a bit of middle ground between the recent low, and we found highs into this 45, 90, 46 area. So it's one area I'm going to look at. You know, get along in around about 44, 50. Doesn't need to be nothing fancy. Tight stop pretty much under there, you know, maybe around the 20, 30 area. If it dips even further down to that 42, 70 area, that's another gift in my opinion, because another solid level that you can see going back through there. Okay, we had the little breakdown there and all the volatility, but it's another one of these solid levels that go, you know, you put it back, you got various points along the way. That's a level to get in at. So I think for this one, yeah, stick a bid in at 44.50 and see what happens.
So long S&P at 44.50, yeah?
Yeah.
Okay. Excellent. Is that going to be your winner, Ryan?
I hope we're both winners, mate.
Oh, by the way, putting in the silver order, it's not letting me because the market's closed right now. So I'll have to put that in, I guess, maybe in like, I don't know, maybe like 15 minutes or something. Just letting you know.
Okay. Okay, perfect. Right. So let's move on to challenge number 3 then, shall we, gentlemen? You ready?
Surely.
Yeah, far away.
All right. Excellent. Challenge number 3 is you need to give us your best short-term trade for the week ahead. So, you know, with an eye to next week, what is your absolute best? What's the best you got? Go ahead and give it to me. Jamie, start with you.
Well then, we've already covered Aussie. We're looking at that. Looking at silver. I would say the best is if gold broke out. Then I would actually be looking to go with that breakout. Also, if gold sold off a little bit more, I'd be willing to buy it down near like 18, 15, 18, 16. So this is let's go to an hourly chart because that was a 30-minute chart. So here is that hourly chart. We have what nice little pitchfork here. High was on that upper parallel. Lower parallel is down here at a very well-defined horizontal. And we also have, again, that thick moving average line that is 2022 volume weighted average price. So that tends to be support when you go into it, right? If it isn't, then it kind of, you want to be out quickly. It was resistance back here last week and we broke to the upside. So again, this is, for the week ahead, I'm going to be putting buy orders down near, it's called 1816 in gold.
All right. So best going into next week is buying gold around 1816. Yeah.
Yeah, and then I would just let it go for the week. If you get lucky and you get a breakout, great. Otherwise, I'm just looking for it to stay kind of buoyant up here, if you will.
Excellent. All right, Ryan, give us your best shot going into next week, if you would, please.
Yeah, this is a tough one. I know we've spoken about it, but my trade for next week, I'm torn between Aussie dollar or euro dollar. I
was going to say, don't say Aussie dollar or euro dollar, right?
Yeah. Sorry. Yeah. So which one am I going to go for? I'm already in Aussie dollar, so yeah, euro dollar be my trade. I'm tempted to go straight in the market, but what I would do is layer some bids. I might go in at market now, see what's going on, but otherwise I'd layer bids at 1400, 1375, and put a stop somewhere around about 1350. Build it up. If it does get back in the box under 114, there is a danger that it stays in the box. But if we hold the low today around about 75.80, if we see it, then I think the upside's going, and we've probed that 115, and I think it's not going to be too long before we bust it.
All right. So to clarify, you're going long. You're looking to go long euro dollar.
Yeah. Right. Let's go ahead, and I'll go long at market now. Then I'll put a bid in at 114 and 113.80. Stop at 113.50.
Oh, he's feeling daring. I like it. Excellent. All right, fantastic. Well, that concludes our challenges, gentlemen. Believe it or not, it really goes that quickly.
Wow. Yeah, it goes quickly. Good luck to you, Jamie. I hope you. Because this is for charities. I hope you make money, mate. I hope you make good money for it.
Yeah, I'm trying to figure out the. Hold on, I'm trying to figure out the size in this. All right, so in this thing, these standard lots is like one Aussie dollar, like 100,000 Aussie dollar, like in 8 cap.
Yes, it would be 100.
Yeah,
it would be 100,000 units.
Okay, and why do I have an open position? I'm trying to buy. This has me in a. Is this like a hedging platform? Hold on here.
Did you mean to buy and sell?
No, I was trying to close half the position.
You're trading both sides of the market here.
He's trying to pull a fast one on you there, Ryan.
Oh yeah. See, in the US, you're not even allowed to do that. Okay. Modify. Okay, we want to modify position. Okay, what? I should probably figure out how to use this platform before I start trading on it. Oh.
That is sage trading advice. Thank you, Jamie.
Yeah, I'm seriously trying to close half the position, and I can't figure out how to do it. So, all right. Okay. Yeah. All right. Yeah, we'll figure that out later.
Yeah, don't worry about the platform, Jamie. Producers will help you out as well in terms of placing.
I'll just send my order. Yeah. See, I'm not used to this one Aussie dollar. I'm used to doing things in notional volume. So yeah.
We should go back to days when we'll be sitting here with 2 phones, one on each ear, banging the orders about.
That's right. So, and I'm also wondering, for silver and gold, what is 1 silver? Is that 1 ounce of silver, or what is that?
Producers, can we get an answer for Jamie on that, please? Yeah. In the meantime, while we await an answer on that, now would be a good time to talk about your charities of choice. As mentioned at the top, in true trading battle fashion, all of the winnings from this evening's battle will go to the charity of choice, chosen, of course, by the winner. So, Ryan, we'll start with you. Which charity did you choose and why, please?
Yeah, well, my charity is called the Dorset Children's Foundation. I moved down to a town in the south coast of England a couple of years ago, Bournemouth, in the county of Dorset. And we found this charity through the local radio station. They do a big Christmas collection. They collect lots of toys off people, drop them into the offices, for all the kids. And it's a charity that provides support for disabled children, for carers, for parents in the local areas. So I like to keep things local if I can. They do wonderful work. And yeah, fantastic charity, small charity. So, they need all the help they can get. And if I can give them a few quid off the back of this, then so be it. And all the better for it.
Excellent. Wonderful. So that's the Dorset Children's Foundation, yeah?
Yeah.
Fantastic. And Jamie, what about you? Which charity?
Yeah, so my charity is it's actually the Robert and Soper Foundation. He's a dear friend of mine who passed away in an accident last April.
Sorry.
It's kind of hard to talk about it. And Yeah, so his foundation basically continues to, that support his legacy by supporting trade-based education and programs that help foster better fathers. He was a very good dad too. So yeah, check that out. You have the website, robertnsoperfoundation.org, and you can read a lot more about it.
Wonderful. Thank you so much, Jamie.
Great.
We've got an answer for you, Jamie, by the way.
On the silver.
Yes.
Okay. Yes,
It's
please. What is that? What's the silver out? What's one silver mean?
It's 100,000 in standard lots.
Okay. Yeah, we'll
Unless
figure it out.
Go big or go home, Jamie.
What's that?
Go big or go home.
That's for FX. Wait, no. So we'll get you an answer another time. How about that, Jamie?
Okay. Yeah, that works. So yeah, basically, like what I want to do is buy like the way I would do my platforms. I'd buy 1,700 like silver. So that would be, for size, that would be 1,700 ounces in silver. But I don't know if I type in 1,700 in this, or if I type like 1.7, or like what I do here. So
All right,
that's
don't worry.
basically what I'm gonna do.
Don't worry about it. We'll sort it later.
Yeah.
With producers.
Okay. I can just send over my trades too on Skype maybe, and like you guys will just put them in for me.
Just go 5 lot and be done with it.
Okay.
Yeah, we can do that.
All right. Okay, I got the answer. It's coming through.
Yes.
Oh,
do you see that one lot is 5,000 ounces?
Yes. Okay. Sweet.
Perfect. Thank you, producers. All right. Well, that's it, guys. That concludes the trading battle number 32. Thank you so much for being here. It was absolutely fantastic battle. The winner, once again, will be announced in 5 days' time. So everyone watching along, if you want to see who won this battle, check back in 5 days. Check the Twitter. The Trading Battle Live. Go on Instagram at the Trading Battle. On YouTube, make sure you subscribe. Make sure you hit that notifications bell. And until next time, everyone, take care. Have a wonderful day. Thanks, guys.
Yeah, thanks for having us.
Enjoy.